Last time our next guest was on, he said gold would rise faster than a rocket ship. He joins us for our special Outlook 2015. Peter Schiff, good to see you again.
Good to see you.
Now, Peter, last time I saw you was at the Grand Cayman Liberty Forum. As we end off the year here, we're seeing a lot of volatility in the gold market. How do you see the metal set up as we start 2015?
I think it's set up perfectly, and I think it's still on that launch pad. And the reason I use the rocket ship metaphor is there's an old adage in trading that markets take the stairs up and the elevator down, meaning normally markets go down faster than they go up. I mean, nobody really panics to buy, but they do panic to sell. But I think it's going to be different for gold. I do believe you're going to see panic buying in the gold market because it's really going to be panic selling of the dollar because so many people expect the wrong thing. So many people believe in this phony recovery. They believe in Janet Yellen and they believed in Ben Bernanke. They think quantitative easing was a success. They think they created a real recovery, and it's going to be a rude awakening when instead of raising rates, they have to launch QE4 to keep the U.S. economy from slipping back into recession. And nobody is prepared for reality. And when reality hits them smack in the face, they're going to have to buy gold. And the problem's going to be there's not much gold for sale. And so I think the price is going to rise rapidly, not only as the shorts are forced to cover, but as new speculators want to re-enter the market and reposition long gold. The bullion that was available in 2009 and 10 and 11, it's not there anymore. And I don't know where the ETFs are going to get the physical in order to keep up with the demand that they're going to get once people wake up to reality.
Now, Peter, speaking about interest rates, do you think the Fed will be forced into raising rates in 2015?
Well, I don't think they're going to raise rates at all in 2015. I think that they're going to resist raising rates as long as they can. And it's going to be a dollar crisis that's ultimately going to force their hand. It's going to be trying to prevent high inflation from turning into hyperinflation. That is when the Fed is going to finally have to raise rates. But of course, by then there'll be so much debt that it will really be painful medicine by the time the Fed allows the economy to swallow it. But is it possible that the Fed could notch rates up a quarter of a point, a half a point? It's possible. I don't think it's probable, but it could happen. But again, even if the Fed starts to raise rates, they're going to have to immediately reverse course and cut them again because the economy cannot withstand an increase in interest rates. I don't even think the economy can withstand the end of quantitative easing. So I think between ending QE officially and raising rates, we're going to slip back into recession. In fact, if you look at all the economic data that's been coming out, it's almost all weak. I mean, look at the holiday sales data. Look at the terrible Thanksgiving weekend and Cyber Monday, big drop in sales. But everybody is so vested in this recovery scenario.
Now, Peter, that's a really good point you bring up because you're right. Black Friday, Cyber Monday, the numbers weren't there. So what do you think is the real story?
Well, I think the story is that Americans don't have money. I mean, they're broke. I mean, their electric bills have gone up, their grocery bills have gone up, their cable bills have gone up. You know, their income has gone down. Maybe they used to have a full-time job. I mean, people don't have the discretionary income anymore to buy gifts. And a lot of the Christmas shopping, people are not buying gifts. They're buying stuff for themselves. Some people wait until, the Christmas season to get the best deals, and they don't have the money. I think the best deals now are going to be next year in the New Year's sales when you have all these retailers that have stocked up on merchandise because they were expecting, a Merry Christmas, and instead, the Grinch stole it. And I think these expectations are not going to be met, and you're going to have a lot of excess inventory marked down.
Wrapping up now, final thoughts for investors as we start off the new year.
Yeah, again, this could be another big year of surprises. It could be another year like 2008. Everybody is so optimistic. You get the Dow Jones making new highs. You get the dollar making multi-year highs against the euro, against the yen. You've got tremendous negative sentiment in the gold market. Everybody thinks it's perfect. It's Goldilocks. And I think it's a perfect setup for people to be very surprised.
All right, Peter, thanks so much for joining us for the special Outlook 2015. Happy New Year.
Hey, Happy New Year to you and all of the listeners and viewers at Kitco.
Thanks so much, Peter, and thanks for watching the special Outlook 2015 coverage we have. We'll have more videos for you until January 5th. In the meantime, you can email us at newsfeedback@kitco.com. Thanks for watching.